So everyone, thank you very, very much for joining on what is, at least in England, an unbearably hot and sticky summer's day. So thank you all for joining us. We're joined here by Marc Zeller from Aave. So Aave is one of the hottest protocols at the moment. There's been a lot of press and news and talk about this and various aspects about crypto lending recently. So Marc will be sharing a lot about the latest in crypto and DeFi and the latest trends and on what he sees as being next. We were initially going to be joined by Jordan, who was the COO of Aave. Jordan couldn't make it at the last minute. So Marc, who deals with their blockchain and their research, has stepped up and is a great speaker. So very lucky to have Marc here. So Marc, thank you very much for joining us. I'm also joined by Ryan Hanley, who was MD of Token Market, who knows the crypto space inside out and better than almost anyone, who is very good at asking tough questions about crypto and DeFi. So grateful to have Ryan here. To everyone who has joined our Crypto Curry live chat, thank you for joining us. And Marc, thank you for coming to us to talk to us about Aave and crypto lending and yield farming and the latest in crypto and DeFi.
Thank you for inviting me. That's a pleasure on my side.
So, yeah, thank you.
So, Marc, thank you so much for joining us. I can't think of a more relevant company to have on a live session right now with what we're seeing in the markets and the huge uptick in terms of DeFi and the various money market protocols which are going on. Hopefully you can help shed some light and explain some of the more technical aspects to this rise. But maybe a good starting point would be to ask you a little bit more about Aave themselves and where you guys sit at the moment, where you've come from, and kind of what you're starting to build on your mainnet protocol.
Yeah, so Aave is like a money market protocol. So we started the current version of the protocol in January of this year. So we are kind of a young protocol with 8 months of lifespan, but 8 months in DeFi is a lot of time. And we basically grew from $0 of asset market size to a bit shy of 700 million as of today. And the history of Aave didn't start this year. We actually 2017 project because we did an ICO with the land assets and to create a peer-to-peer lending protocol that was called Headland. That was a community success at the time, but it was a bit early because one of the incredible thing you have on Ethereum is all the synergies. And basically everybody builds something that will be useful for the whole ecosystem. And basically when MakerDAO, which was industry pioneer into decentralized finance, created the stable coins. So those tokens that tracks and stay very, very close to their peg, which is most of the time $1, it was a complete paradigm shifter for the blockchain ecosystem in general, because that allows you to have a very reliable tool against volatility, and you can use that as a building block to create more services. And that basically was the genesis point of decentralized finance. And based on the stable coins from MakerDAO, we had a lot of new stable coins like USDC, USDT, and it grew to be a more than $10 billion market as of today. And one of the very cool innovator in this space as well was Compound, that released at the end of 2018, if I'm not wrong, a new way to do some not anymore peer-to-peer lending, so matching a demand with a supply directly, but a peer-to-protocol lending. And basically we call that the protocol lending pools. So everybody put their assets that they are willing to make them available in exchange of some passive income to borrowers into the same vault, into the same bag of money that is a smart contract on Ethereum. And basically the borrowers will just take some asset from that big pool and pay interest directly to the pool that will direct proportionally to every single liquidity provider. And that system is so efficient that allows to grow and to make DeFi much more attractive. And I think it was the starting point of what we have now. But for us, it's very important to realize the DeFi is not a new thing. It's like people working since years to build tools to create new stuff and new services and probably the future of finance. And when we talk about Aave, we can talk about the innovation. So each new project will add new feature that doesn't exist before them in order to create new things in the ecosystem. We created quite a few stuff. One of the first thing is the flash loan, and I'm pretty sure we will take some time to talk about it. Another thing is the stable rates. So thanks on Aave, as a borrower, you have the option to have perfect vision of what will be the cost of your loan. All the other DeFi protocol work with variable rates. We have this option, but variable rates are simply the pure meeting of supply and demand. And in a market that is as volatile as crypto, well, you can probably, it's not that uncommon that people open a loan with a very low rate, then the market conditions change widely and they end up with very high fee loans. That might be an issue for them. With stable rates, you don't have that issue at all. Another, among other innovation, one of the last I want to talk about is credit delegation. So that's actually brand new. It's something that we released a couple of weeks ago, and the first one happened last week. It's actually the possibility for any liquidity provider to delegate to a third party their borrowing power. So the whole DeFi ecosystem works on a model that is not new at all. It's actually something that came from the Middle Age called the Lombard credit system. So basically you lock and you deposit as a guarantee some assets, and you are able to borrow always a lower amount than the value of your deposit. And that's super interesting when you hold some asset that you don't want to sell, but you are in need of liquidity. But that's not very efficient when you don't have a lot of capital lying around. And basically credit delegation fixed that issue by allowing people with capital to delegate their borrowing power to third party in exchange to a very small premium on the market rate fees.
Okay, so and you guys have just launched this credit delegation facility.
Yeah.
And I understand you've got a live client who's already taken out a loan and then delegated that credit to another party. Maybe you could take us through sort of a step-by-step process in terms of how that kind of worked and the components within that process taking place.
So credit delegation is a partnership we did with OpenLaw, which is a very cool project that aims to, and doesn't aims, actually do bring into the blockchain legally binding contracts, so actual contractualization represented inside the Ethereum blockchain. And so it's not 100% decentralized. Well, it is decentralized, but it's not permissionless. It's permissioned because in order to be legally binding, you need to identify the party of the contract. So it's done with some KYC. And so it's a partnership with OpenLaw. And what happened is that the liquidity provider, the lender in that situation, will sign an agreement, a legal agreement with the borrowers that is the actor that will access the liquidity without collateral. And once that agreement is actually signed and validated and legally binding, the lender will allow the borrower to access a very specific smart contract that we call credit delegation vault, and that borrower will access the funds, the borrowed funds. And in that way, everything is done in the decentralized way, and the borrower never ever has access to the collateral of the lender. The collateral of the lender is never touched by the borrowers. It's never in his hand, and it's always protected.
So effectively, what you've done is you're able to lock up in a decentralized smart contract.
Yeah. So think of it excuse me, go for it. Sorry.
Okay, we've got a bit of a time delay. I'm on the other side of the continent. So effectively, you've reflected what's in that smart contract within actual enforceable legal law within a jurisdiction. And that's like a first really within this space.
Exactly. So think of it as an escrow so an escrow system, but with actual legal implication and a bit more secure than just a regular multisig that we will probably find in Bitcoin, for example. Ethereum allow you to have much more sophisticated logic into your smart contract. So it's not just a multisig, it's like something a bit more delicate than that.
Have you done anything to reassure users of the safety of what they do lock up?
So yes, every single line of code that is into production, so every single line of code that a user can interact with has been audited on it. And that's basically something that we did since the first day. And I think it's the industry, and it should be the industry standard and the minimum. And if, for example, if you go to aave.com/security, you will find the most recent audit of our code base. And obviously, we are 100% open source, and we have a very generous bug bounty program. And so if you find any issue with our code, feel free to talk about it with us, and you will be paid for that.
Okay. So I think you've done a really good job of explaining this delegated credit. I think that's incredibly interesting. The thing that I think I've struggled with, and hopefully many other people on this call, is the concept of flash loans, which is where you guys really made your name and this wonderful term. So a way in which you can borrow from the Aave pool a large amount of funding in an uncollateralized manner and then pay it back in a very, very short period of time. Can you explain to us a little bit more about how that dynamic works? How that's secure, and also what people are doing with that as well. So why that is a thing, and why you're allowing people to actually interact in that way,
and why people would risk that, and if you've got any details about what type of people would risk that, I'm very interested.
Yeah, sure. So it's a large topic, but I would like to start by saying it's probably one of the paradigm shifter for DeFi. Because that's actually a financial product that can only happen on Ethereum, only happen in the decentralized blockchain. That's not something you can find on traditional finance, because it's just the future of a flash loan are only possible on this kind of setup. And basically what happened on a flash loan is that, as I said a bit earlier, we are a protocol a bit shy of $700 million. And you can, with a few lines of code or with services that will do that for you with a nice user experience and without a single line of code, borrow up to $700 million and do whatever you want to do with it on Ethereum at the unique condition that you bring the money back and you pay a very small fee. Mm-hmm. And you don't need any collateral to do that. You don't need any capital to do that. You just need to write a few lines of code and it will happen. And some people, when we described that, was like, whoa, this is incredibly risky, because if you give me $700 million, I will not bring it back. And that's the beauty of Ethereum, is that everything happened not inside the same block, but inside the same transaction. And if you are in crypto since a few years, but was not that much interested until now into Ethereum, you may be used of what is a blockchain transaction with Bitcoin. And basically on Bitcoin, a blockchain transaction is I have X amount of Bitcoin and I will send you that amount, and that's it. And there's more complex transaction on Bitcoin with scriptless script and Taproot and all this kind of stuff. But at the end of the day, it's not that common. On Ethereum, you can do much more things. You basically are allowed to do whatever you want as long as you are ready to pay the transaction fee for. So if you want to start your transaction with, I will borrow X million from Aave, I will find this asset, the asset A, on a platform that is priced at some price. And I just saw on the market that on another platform, another decentralized platform, the same asset is priced slightly higher. I will be able to borrow funds from Aave, buy the asset where it's cheaper, sell it immediately. There's no time frame on that. Yeah, arbitrage. and then bring back the money I borrowed to Aave, pay the small fee, and keep all the difference to myself. And all of that inside the same transaction. And what is really important to understand is that there's no time frame. Everything is instant. And if for any reason I'm not able to bring back at the end of the transaction the money I borrowed from Aave, well, the smart contract architecture will just reject the full transaction. And basically, that's why we say flash loan only exists when they succeed, because we never are the flash loan that failed, because flash loan that failed never existed, because they are never included in the blockchain. They are just rejected by the architecture. That's why it's super crazy, but it's probably one of the safest products we have.
Yeah. But I mean, that's examples, like you say, where the arbitrage works in their favor. I mean, crypto being so volatile,
yeah,
you can't always predict what would happen if the people were to lose more money than they can really afford to, just on a split second change in that price.
Yes, you can, because
which happens in crypto.
Yes, but from the technical perspective, basically a block is just a big bunch of transactions, and the blockchain, the EVM, the code that runs the blockchain, to put it simply, just runs the things one by one. So you have 1,000 transactions or 100 transactions inside the Ethereum blocks, and the EVM will execute transaction 1, then transaction 2, then transaction 3, and so on and so on. And basically, inside your transaction, you are in the full control of the Ethereum blockchain. There's no single interaction from a third-party actor that can happen during your transaction. It can happen just before, just after, but never inside your transaction. So if you have the right code to monitor and to find the opportunity is yours. And that's pretty powerful.
So effectively, what you're doing with this is you're incentivizing a user base to hunt for arbitrage opportunities. They're only rewarded if they are actually there and real, because otherwise the transaction will just fail. Is that right?
Yes. Yeah, the transactions just don't exist.
That is mind-boggling.
That is incredible.
That's brilliant.
Is there any limitations on who can do those?
Nope, no limitation, decentralized. So the limitation is it's the skills. So basically everything that is enabled by flash loan was, before the flash loan, accessible to the rich, basically. And basically what flash loan did is to provide to anybody with some skills all the opportunities that were only accessible to the wealthy.
Wow. I mean, it's a fantastic concept, and I bet probably 60% of your time is explaining how that's even possible. to many people as you come across them.
What has uptake been like for that?
The what?
The uptake, the sort of interest and
the volume. We have like dozens of millions of dollars of volume per day, I think, on flash loans, like a very significant amount.
So just pivoting away from that for the moment. So, we've seen this tremendous growth over the last few months. So we've seen billions, up from, I think it was about 600 million, maybe in February, March, locked away in DeFi. And now we're 4 billion, probably more. I think we've seen about 600 million going into this crazy YAM protocol that we'll talk about a little bit later. Huge amounts of usage and huge amounts of funds coming in. But one of the things that has been noted sometimes is how many people are actually involved in these types of contracts. So in terms of the user bases, people who are actually able to lock away and are actually using this capital and earning these governance tokens, there seems to be a number of different wallet addresses. Do you have any understanding of, the kind of the daily active users who are actually involved in the protocol?
So daily active user, it's kind of weird for a lending pool protocol, because you usually don't go to your own bank every day to take a loan or pay back your loan. Usually you do it and then you wait a bit of time and then do something again. So we are not like Facebook. We don't need people to be on our website every day to work. That's one thing. But in terms of activity, it was like an explosion this year. So basically, at the beginning of the year, like January to March, which was more the early days phase, we had like in DeFi around 15,000 users. So that's quite a number, but relatively small. And we just crossed like last week, 300K user. So quite a bigger of growth. And one of the easiest way to witness that is the actual transaction price, because the infrastructure of Ethereum has a limited amount of transaction they can. It's around 13 to 15 transactions per second. So if you have more users, you will have more users willing to pay more to actually do their transaction before the others. So the overall gas price will increase. And right now the gas price are 100 times higher than what they were 6 months ago.
So that's the natural limitation.
Yes.
And I mean, one of the kind of the things that really brought a lot of attention into this space, and saw this sort of magnificent growth, is a company that you mentioned earlier. So Comp, we saw this token obviously being earned. We heard this term yield farming for the first time, or in the more wider sphere. Can you maybe talk us a little bit more about what these particular incentives were around the Comp token, and why this managed to sort of explode so quickly into the scene after launching?
I think in order to explain it, I will not just focus on Comp and Compound, but just give a broader look into the ecosystem. Basically, when you create actual decentralized application, you have several ways to do it, and you basically have several that are present inside the market at the same time. If you have like the more cypherpunk vision of decentralization, where every thing should be without KYC, without custody, you are the owner of your own money, and nothing should limit you or prevent you to do things you want to do with your assets that you are the owner of. Being decentralized on the financial part is not enough. So of course, on Aave, on Compound, on all these platforms, they are truly non-custodial. So the team behind those projects, and on Aave it's the same, we don't have any access to user funds. We don't have any access to user position. We cannot withdraw money all our code is audited in open source. So if that was the case, probably somebody would have found it. It's the same for all the protocol, but that's not, how can I say that? That's only half of the path of decentralization. The other half is, I think, even more important, is that the governance should be decentralized. So what are the assets we list? What are the risks we are ready to take? What are the profits? And how do we decide if there's some profit of the protocol, or they are redistributed, or they are invested? Do we want to take that direction or another direction? And the governance, for the most part of the beginning of DeFi, was completely centralized by teams, around teams. And it's the same thing on Aave, because the Aave team, in order to deliver and to grow the product, was taking a lot of the decision. But we do believe that's not super sustainable over time, and that should not be the way, because protocol should be controlled and should be inside the hands of their actual users. And basically what happened in the yield farming is that one of the best way to distribute the power of decision to your community is actually distributing some tokens that will be used for governance to every single one of your users. And basically it's yield farming because some people decide to give values to those assets, but at the end of the day, just voting weights and voting power in order to give direction. And obviously, if the protocol is quite big with some liquidity and vote can have like huge consequence, I think it's pretty fair to say those tokens should have value. But the main point of yield farming is actually governance distribution. And
so one of the sort of the lines of thinking, obviously, with these governance tokens, and maybe, and obviously I'm speculating, and maybe that the reason is that people wish to be able to gain a vote. They hold these tokens in the view that at some point in time, there will be a vote to distribute funds to token holders who hold governance tokens.
Yeah, and I think it makes sense to do that. I think it's the logical next step. I think most projects should monetize their governance token. And the teams, we have this vision at Aave, not especially on distribution of rewards or dividends or all these kind of things, but we really do have this vision, and we are launching this week our governance module in order to do precisely that, is that our role as the team is to take the consensus from our community, convert that in what we call the AIP, Aave Improvement Proposals, and the AIP convert that into safe and audited code to submit to the community. They vote, and then it becomes the evolution of the protocol. And basically, we are the employees, or we work for our community, because we are decentralized, and it's not of any interest for us to be in control of X amount of million protocol. What we want to do is to build the future of finance.
So I want to sit on this a bit, because this obviously, this kind of movement is absolutely mind-blowing, right? And this is the core of DeFi. So literally having no one central person who can be held liable, who can be regulated, and then you're kind of spiraling off this, obviously, this completely new financial market, which is the major reason for a number of these projects to survive. But we can't touch on this without touching on some of the regulation around it as well. You know, there's obviously a sort of a period when this goes from sort of centralized to being decentralized, when you guys give up the admin keys, and then it sort of runs riot and it goes off on its own. Are there any pitfalls in this? I mean, is there, you know, going to be any liability which will be held by the central team who has, I wouldn't say created this monster, but has, you know, started this process and then completely decentralized something which then starts paying out dividends based on profits, which would, in a more traditional financial market, be regulated by financial regulators? What are the kind of the things that you guys are thinking of as you kind of go through this process?
Well, I want to start by, I'm not in the compliance team, so nothing I say is legally binding. Be completely uninformed, and so take it with a grain of salt. But at least the ethos that is very common inside the community is that we should burn the admin keys, and we should make sure that if regulation wants to be hostile, which is not the case, like right now, regulation is more inviting and curious than hostile. There is not a lot of jurisdiction in the world that is clearly anti-crypto or anti-DeFi. Most of them just don't know what it is, or just say, oh, it's a new thing, and I hope people are cautious and there's not too much scams. And basically, they let innovation happen, and they will probably regulate, but when things settle down with like clear actors and clear markets. And because we are in a market where a project, we just say that like overnight can grow to be a 300 million market. So it's very hard for a regulator to step in and to catch up. And the thing is that I do believe that the DeFi protocol will be more and more, and I do believe as well that Aave is taking very actively that path, that will just be in control of a DAO, a decentralized autonomous organization. And basically, if you want to talk to the leader of Aave, well, you talk to the token holders in general.
Well, there's a question come through on that note from, forgive the pronunciation of your name, Mikita, about if you need do you need a legal contract, and if something goes wrong, how would a court enforce that, and what would happen if regulators do want to step in?
On credit delegation, or to use Aave in general?
Both. The question didn't specify, so if we go to both.
Okay, so Aave is a completely decentralized, permissionless protocol on Ethereum. So no matter who you are, no matter where you are on the planet, you can access Aave services, because we are on the Ethereum blockchain, and the Ethereum blockchain doesn't have any kind of jurisdiction. It just something on the internet. And we have no control over that, and we have absolutely no way, technical way, to prevent you to interact with our service. And that's very important, because that's not a bug, that's a feature. That's the first part. The credit delegation, on the other hand, if you are a lender or a borrower and you want to access that services, you will have to sign a legally binding contract with OpenLaw, provided and powered by OpenLaw, in order to contractualize and protect you as a lender and give you some responsibility as a borrower for the relationship of the loan that you will take on this side. But that's a very specific feature, and if you don't want to do that, you can use the main services as anonymous as you want.
So one of the areas that obviously has been focused on with DeFi at the moment is very much around lending. You know, quite easy, it gets locked up, you've got a pool, great, people can then, you know, lend against this asset and they can get liquidated if they do wrong things and what have you. One of the areas which we've actually already seen some regulation in the UK trying to almost front foot the market is on derivatives and crypto derivatives, which it seems is potentially going to be the next big thing as this kind of market evolves and transgresses. Do you see any sort of pitfalls coming up there? Do you think this is going to be something viable in the next 3 to 6 months, or anyone who's sort of working on this specifically now who's, you know, particularly interesting?
I think there's a lot of innovation to be done on derivative, but derivative is a very broad term. So it's a lot of different kind of financial products can fall under the name of derivative. But what I would want to talk about is, like, because that's the biggest and the innovation that is already there and will grow over the next few weeks and months, is synthetic assets. So tokenization, representation of something that happened in the physical world or on other blockchain. And I think that's a market that will grow a lot, and even more in the coming weeks and months, with actors like Yuma, with actors like Synthetics Network, even MakerDAO. They talked about so the Ethereum, the World Ethereum Conference that was hosted in Osaka. And I think more Jarvis is working on that as well. And more actors will provide you with option to be not exposed to the actual underlying assets, but to the price fluctuation of those underlying assets. And that makes things very interesting, because if you are not a qualified investor, or if you don't have access to the Japanese market, or if you don't have enough money to buy a full Apple stock, for example, or an Amazon stock or whatever, you can buy 0.01 part of a token representing the price and the fluctuation of the price of the Apple stock.
Yeah, and on this point, I mean, this is, you know, absolutely mind-blowing in terms of being able to gain these access to these world markets, you know, to be able to really and democratize access to these things as well. Oracles play a huge role in this, in order to ensure that price discovery is correct and so on. Do we need to see significant improvements in terms of the oracles which are currently out there at the moment, or are we sort of a sufficient stage where we can start bundling these things together and then working fairly effectively without the fear of security flaws or attacks?
I think it's been a year now, not a year, but more than 6 months now, that the answer is very clear on oracles. Chainlink is the industry standard. We are actually, as a protocol, powered by Chainlink, but we are not the only ones. Like, all the DeFi that matters is powered by Chainlinks today. And why is it like that? It's because Chainlink proved in the worst of time that they were a reliable partner. So basically what happened during an event that we called the Black Thursday during the mid-March, which was a huge crisis in finance in general, not only in crypto, because the traditional financial market crashed the same day at the exact same moment, but in crypto it was even bigger, because in the matter of 1-2 hours, we seen the valuation of most assets go down of 30 points, 50 points in 1 hour, which is completely crazy. And most platforms of DeFi had a huge issue to keep up with those price variation, except all the ones that used Chainlink. And basically during that event, MakerDAO had an issue with a few $1 million that they were able to fix, and we are very happy for them because it's a great project. But we were not in this situation because we use Chainlink, and Chainlink is the best Oracle system. And also very recently, we had like a huge volatility events linked to the Chainlink asset, the Link. And basically we had for around $30 million of borrows loans of Link that had to be liquidated on the platform to make sure that the collateralization ratio were respected. And basically, thanks to the Chainlink Oracle, the whole liquidation process happened seamlessly. And nobody really talked about that. It was not an event. I can guarantee you that 6 months ago, it would have been a huge event. But now we can, thanks to this level of reliability, we can liquidate tens of millions of dollars of position without nobody caring about it.
I mean, it's such an interesting movement, which is what's happening within DeFi, and as you say, the robustness of some of the smart contracts, especially with guys like yourselves, guys like Compound as well, adding sort of a more adult element, I think, to the space, which is sort of breeding confidence. But we can't have this podcast without going to the other side of the scale, because we've started to, well, my Telegram feeds, my WeChat feeds, they all feel very 2017 at the moment, where there's a lot of people rushing to get in to certain platforms and protocols. And I think one of the most interesting ones, which is literally going on live now, is YAM. This launched yesterday. The smart contracts are unaudited, clearly communicated that they're unaudited. And we have something like $400 million locked up within this protocol at the moment.
Well, just to interject, we've been watching the Ether scan on that. So since this live chat started, there's been, in total, there's been 22,500 transactions of people investing their money in this. Just since the live chat, there's been 1,500 people today. Yeah.
Yeah. So basically, what is really interesting with YAM and Wi-Fi before him, and a lot of other projects, but I think Wi-Fi and YAM are the most interesting yield farming events and hype that we had in the past months or 2 months. I don't even remember. There's so many things that times is like something else. And what is really interesting compared to 2017, like in 2017, when we had some hype on a project, it was basically, it all boiled down to one fancy looking website and a PDF with some white paper stopping on it. And
don't forget the great videos. There were some fantastic videos, to be fair. Very good.
Yeah, awesome videos. But nothing, like actually nothing. It was just a token, and you send some money somewhere and they send you some token to your address. And no, all those protocols, they actually work. There's actual product behind them. There's actual code that is running, and there's actually a project behind that and some theory. And when we say YAM is completely unaudited, that's true. That's completely true. But what is interesting is that there's a lot of recycling of well-known code in YAM. So they took some aspect of the compound code, some aspect of synthetics code, and some aspect of other ample-for codes, and they matched it together in order to create new features. So it's not audited because it doesn't work like that, the security. It's not because you reuse something that is well known and well secure. If you alter very small things into that very well known and well secure, you cannot guarantee that the whole stuff is secure now. So it doesn't mean that YAM is safe. And I will advise everybody listening to us right now to express a lot of caution and to do their own research before considering to invest or actually use the YAM services, because It's a very brand new code, and that comes with a risk. And there's basically no free money in this market. So if there's some money to be made, that means there's some risk somewhere. That's the first thing that I wanted to say. It's kind of, it feels like 2017, but for me it's very different because it's like much more sophisticated than in 2017. And the other aspect is that it's not just like 2017, because in 2017, when you did an ICO in a world where there's no Uniswap, there's no balancer, there's no Curve, there's no Aave, there's no Compound, all this ecosystem or actor, the only thing we can do with the money you raise is knock on Binance door and say, please take an absurd amount of money and list my token, so my token will gain value. And basically, right now, when you launch a cool project like YAM, on the first block of the release of the assets, you can have a decentralized, fair market that is open directly. And that's basically what happened on Uniswap. So everything is bootstrapped so easily because right now it's a fully fledged ecosystem with actors that can have real synergies together. And basically what will happen today with the first rebase and the start of what they call the second wave of rewards is that you will see a direct synergy between the Curve project and the YAM project. Mm-hmm. And we all know that the Curve project is releasing the CRV token very, very soon. And basically, it's a way to basically plug and create something that is even better than the rewards of one platform, but you can expect a situation where you can have the reward from YAM, the reward from Curve, with the CRV token, the reward from YSwap, if you do things in a particular ways, and it all boils down and ends up into Aave liquidity, so you end up with the Aave reward as well. And this kind of very cool, but also very scary stuff was absolutely not even thinkable in 2017.
So, I mean, in terms of the risk elements and the threats to the movement at the moment, because obviously we had a huge amount of momentum that's been built up. As you said, I think you're right in saying, we actually are seeing this being driven by users and activity on fully audited smart contract platforms, which is fantastic. What are the things which may potentially provide roadblocks for this really growing outside of this very, very small niche that we currently have, who are able to actually transact within DeFi? And what do you see in the next, say, 12, 18 months being really pivotal to this market really continuing to grow at the pace it already has?
To me, the main roadblock, and that's going to be make it or break it moment for DeFi, is that the Ethereum infrastructure, like the actual network, the Ethereum network, has a very limited talk port bandwidth. And basically, we are on Ethereum layer 1, we are limited to 13 to 15 transactions per second, and that's it. And the thing is that DeFi, which is a subset of the whole Ethereum ecosystem, grew from, at the beginning of the year, 15,000 users to more than 300K users as of today. And it's ever growing. And the direct consequence of that, and it's basic economics, if there's the same amount of supply but ever growing and exponential demand, well, the only way to make the true position meet is the actual price, and the transaction price right now on Ethereum are crazy. So if you want to do a simple transfer, you will end up with a few dozen cents. But if you are more willing to go for more complex transaction, which is, for example, yield farming or interacting with Aave or all this kind of stuff, it will cost you from 5 to 20, and even very specific case up to $50. And it's only getting worse from there because DeFi is more and more hype. There's new people discovering DeFi every day. There's like 66 participants in the live site right now. I can guarantee that during less active moment in crypto, numbers are slightly less. And so that will be the main bottleneck. Yeah.
With Ethereum and the number of transactions and the huge cost that's going on at the moment, we see other chains. There are other chains which are out there which don't have the amount of real users as Ethereum does. They don't have the developer base, But are companies like Aave, are you building in an interoperable way? Are you able to go and pivot and move on to another chain? And do you think there are any feasible alternatives which are there if these problems continue and we see a rollback again of some of the upgrades that are drastically needed in the Ethereum blockchain?
Well, the first thing I want to answer on that is that we are an Ethereum-focused project. So we were, as developers, most of us born and raised into the Ethereum blockchain. So I knew the Bitcoin blockchain, but I didn't have any kind of technical activity inside Bitcoin. I started my technical activity in Ethereum in 2015, and we are an Ethereum blockchain to the core. That being said, as a financial protocol, it's our responsibility and for the whole Aave community to not play favorites with protocols. And basically what will happen is that the true focus is not to take the whole Aave market and let's say do the enormous mistake that will be to go into Trump, for example. That would be like the worst case scenario. But rather we have a multi-market approach. And basically you have the Aave main market, which is just a bit shy of $600 million or 700. And you also have a live, as of today, the Uniswap market that allow you to provide other kinds of collaterals. And we will launch this month a lot of new markets. And alongside that, for us, it's exactly the same strategy to just launch Aave markets on layer 2 protocols and on other EVM-based blockchain or other blockchain that have the capabilities that Ethereum offers, and just let the free market decide. And if the free market decide, for example, the Near protocol or the Matic protocol or Scale or Loopring, well, that will be the main focus afterward. But as a financial protocol, our role is to be present in most of the scalability solutions that exist and in most of the serious blockchain projects that exist.
So I know you're probably not going to answer this, but who's your money on? Who would you say is the most viable competitor to Ethereum? If you can name just one.
Well, what I can answer is that I know the answer to that.
Okay. Well, I said I didn't think you'd answer it. It's fair enough.
Thank you. Just to interject there, thank you so much, Marc. How are you hosted, and can this be shut down by taking down the servers? And are we looking at AWS, or how does that work with your web serving and processing, and what are the risks to you there?
That's one of the most important questions we can ask to a decentralized finance protocol, because it allows us, when we answer to that question, to emphasize the decentralized part of decentralized finance. And basically being decentralized means that the whole protocol, at the end of the day, is just a bunch of smart contracts inside the Ethereum blockchain. So it's inside every single node of the Ethereum blockchain. So each time someone has a copy of the Ethereum blockchain, they have the full Aave protocol inside of it. That's the first part. And Ethereum is never done. So Ethereum is launched since the kind of half of 2015. And it just added a new block every 13 to 15 seconds. And basically it's impossible to stop Ethereum. That's the first part. The second part, and that's also quite important, is the front-end part. So if you go to aave.com or app.aave.com, that's something that is hosted in a centralized way in AWS or other kind of provider servers. But it's not important. It's not important at all, because as we are completely decentralized, the Aave services are replicated and integrated in a wide range of applications on the ecosystem. So if for any reason Aave.com doesn't work, you can access your full position with DeFiSaver.com, with SteamV.io, with MyEther Wallet, with Argent, the wallet on mobile, Trust Mobile, and so on and so on. And you have like dozens of options to access your service. So when you create something that is truly decentralized, it's impossible to take it down.
How do you audit your smart contracts? And also why are you supporting only Euro? at the moment at fiat onboarding, and have you got any plans to move to US dollars or to other fiat?
So we do have US dollar onboarding. So basically, I will answer first on the audits. I will invite you to check aave.com/security, our page dedicated to the bank bounty and the audits we have and all the safety measures we implement inside the protocol. You will find every single audit report we did. And so basically we did audits with TraderBits, which is one of the most reputable firm of the ecosystem. We have an ongoing contract with Consensus Diligence because we send them too many codes, so we basically take a subscription with them and a lot of other services as well. And everything is present on the website and accessible. That's the first time. On the fiat on-ramp, I want to emphasize the fact that we don't do, as an entity, the fiat on-ramp. We basically host inside our website a module, a widget that is completely managed by Transact, which is one of the subsidiary of Consensus, if I'm not wrong on this. And they basically have a license and handle all the money management. And yes, if you have euros, if you have dollars, if you have, I think they accept 35 currencies at the moment. You can directly buy some DAI, some USDC, or whatever assets you want to acquire.
Okay, can staking in Lend, Yanis, the same person is asking if staking in Lend can be market manipulated, and is there the possibility of flash liquidity events to destabilize the capital pool?
I don't see any technical way to do that. First of all, staking, what we call staking is more appropriate to call safety mining. So basically, as a Aave token holder, so it will not be linked to the Lend asset. What will happen this month is that there's a very high probability that the Lend token will become the Aave token, and the Aave token will be able to be deposited into what we call the safety module. And that will allow you to take most of the protocol fees and the inflation of the Aave asset in exchange of a very important responsibility, because if there's a critical failure of the protocol, you will be invited to pay the bills, basically to protect the liquidity provider. And to the best of my knowledge, there's no way to interact with Flash Loan on the staking of the safety module contract, because the safety module contract is just a big fancy vault, a pool of liquidity from the stakers.
No, thank you. One interesting question through about your potential expansion onto Africa and into other continents. So the question is, does Aave intend on expanding your services to the African continent at some point, especially looking at financial inclusion services for banking the unbanked and for DeFi for the population that don't necessarily have access to banking? Is that something that you've considered? That question's been asked in various forms a few times by a few people.
Yeah, so I would like to remind the audience that one of the biggest DeFi projects is actually African, because Wi-Fi is, we don't really know where Andre is, but we know that he's from South Africa. And Cape Town especially is one of the most thriving blockchain community in the world, with the best developer of the ecosystem. So blockchain and DeFi is quite present in Africa already. And for the part of being accessible to the unbanked population, well, to me, it's like very complex to understand what is unbanked, when a lot of people maybe doesn't have a bank account, but they have access to services like M-Pesa or alternative banking that is very efficient in this kind of areas, especially in Nigeria. Like there's a very big Ethereum community of developers in Nigeria. At Lagos is one of the best community we have. And basically, if we want to offer DeFi services to the broader audience, no matter how much asset they own, you need to do that on layer 2. And basically, in order for everyone to access very cheap transaction fee and very fast transaction. And to do that, you need layer 2, and that will happen over the course of the next few weeks/months. And in 2020, targetable audience of DeFi will be much more larger than what we have right now. because I do understand that right now with like $20 or $30 transaction fee, DeFi sounds very much like a rich people club. And that's not the main ethos, because when we want to create decentralized finance with the same rules for everyone and no one that is above the order, that's not part of the objective to be only for the rich and the wealthy. So yeah, thanks to layer 2 and scalability solution, the targetable audience of DeFi will be much larger at the end of the year.
Mm-hmm. I mean, there is a specific question on layer 2 from Lucas. What layer 2 solutions within Ethereum do you see as most viable for DeFi dApps to adapt in the near to adopt in the near term?
Yeah, as I said to Ryan a bit earlier, I have a clear idea of that, but I will let
You're not gonna
think about it, because there's a lot of cool projects.
Fine, fair. One question back to Yam from Jason. How is Yam making money, if you could explain that, and what do they do with it, and what do you think will happen there?
Yam is not making money. So basically the founder, so the Yam team is not making money, because the Yam team took 0% of the supply to pay themselves. Mm-hmm. And basically for them to collect some Yam, the only way is to do like everybody else. And that's basically what Wi-Fi did, what we call the Nakamoto way, in reference of Satoshi Nakamoto and Bitcoin, that did exactly the same model. In the context of the protocol, each time there's a rebase, there's a very small percentage that goes to ecosystem reserve. And when you have some token, you can decide with the governance what you will do with that reserve. So do I want to give a budget to the development team? That might be a good idea. Do I want to redistribute that budget to the liquidity provider in order to emphasize growth? Do I want to spend all that budget into memes and whatever crazy fancy stuff? And all of that will be inside the hands of the community. And that's a very interesting part, because it's exactly the same thing with Aave. So Aave, we have some protocol fees, and it will be completely up to the governance to decide what the Aave community want to do with the ecosystem reserve, which is something that exists inside Aave. And I invite everybody to consult the Tokenomics or paper on proposed economics. And there will be proposal to say what is the budget attributed to X subject and Y subject and so on.
I mean, it's a really fascinating method with what Yam has done, and obviously what Wi-Fi has done as well. And you've almost got these two schools of thought and different types of successes. Can you talk us through maybe some of the protocols which have been highly publicized by some of the larger VCs within the space? So we know that Comp obviously has a very, very famous backer. Can you maybe go into some of the specifics on how those VCs are funding those projects and how they are actually making money from some of these protocols? And the very other traditional school of thought, as I say, you've got the completely free, no pre-mine, off it goes into the wild. And then you have these, you know, as I say, very established initial investors which attract attention and also attract activity as well. How are these guys profiting? Because that's what VCs do, right? What's the structure there?
As I said earlier, you have different kind of DeFi. And I think it's not about the VC themselves, it's about the mindset. And basically, you have a bunch of projects that have the decentralized ethos in mind. And really the idea of let's burn the admin keys, let's not have a pre-mine, let's put all the power into the hands of the community. And that's something that is very appealing to me. You will have, and it will appear more and more, some people that just put a DeFi stamp on their project in order to serve the hype. Exactly what happened in 2017, where everybody was doing blockchain, even Kodak. I don't know if you remember that.
Yeah, I see it.
Doubled their price, yeah. Kodak. Yeah. Very interesting moments. Interesting moments going on with them at the moment as well. They seem to be constantly in the press. We are.
Exactly. And the third kind is people with more the CeFi mindset that just do and create DeFi services, but at the end of the day are maybe ready to decentralize the financial part. Sorry for that. Are ready to decentralize the financial part, but not that ready to give up control that much. And basically what happened in a few protocols is that you have 3, 4, 5 holders with more than half of the percentage of the vote. And what kind of decentralization is that?
Cool. No, thank you so much. There are a few questions, but I'm conscious of timings for you also. Just two very, very quick questions. Kieran is asking you just to clarify quickly about the flash loans. If that fails to complete, is there zero cost to the user?
There's no custody in the decentralized finance protocol. So there's no any point in time where we are in control of your money. You are the owner of your money, and that's a very important part of DeFi.
And no, so that was about the flash loans. If they fail to, there's no cost.
Yeah, well, there's you pay a fraction of the transaction fee.
Okay.
It's a way for the Ethereum network to protect itself from people creating millions of flash loans just to create too much work for the nodes of the system. So it's not costly, but it's not free. You pay a very small amount, and if you want to do 1 million of flash loan that would not work, it would cost you a lot of money. But if you just do one, it's not something that is important.
Oh, okay. No, thank you so much. Just one very quick last question for you, because this is, two ones just popped up. Is YAM the DAO from 2016 all over again?
First thing, it's actually bigger because the DAO was like $250 million.
Mm-hmm. Fair. Okay.
And I think, and I don't know, we will see.
The line was following, I'll put the link in the chat, the ICO sort of numbers from 2017, like pretty much directly.
Yeah.
But I mean, like obviously a few years later, but like the same.
Well, one of the good indicator of a bubble is there new money coming inside the market? Because usually a bubble is 3-step, like excitement from the insiders, institutional, it's big players coming in, and then at the last step of the bubble, retail's going crazy. And the thing is, until the end of July, so very recently, until 2 weeks ago, when you look at the global market cap of the cryptocurrency market, the line was pretty flat. And that means that even if DeFi, for example, was growing, it was just rebalancing of portfolios. People capitalizing on assets that are underperforming for years and willing to take another bet on more maybe performing assets. And basically that's what happened. But what we are witnessing these 2 weeks is that the actual global market go up. That means there's some new money that's coming, and it's quite a good fit with the higher and higher interest from institutional players. Sorry for my bad English on this one. But to the best of my knowledge, we don't have a real retail rush. So for me, right now, we are in the situation which is the sweetest spot, because we are not in a bear market, which is all in for the tech, which is a very good spot to be in, but it's hard to grow things in this kind of instance. We have some interest and some capital going into the market, but we are not yet, and it will happen eventually in what I would call the fanboy era, where you have like the moon boys and the retails going crazy, and everybody and their uncle will want to do DeFi. And so this is probably the sweetest spot, so seize the day. It would not last forever.
Yeah, no, it's crazy. I mean, what do you think will happen? Do you think there'll come a point when it will just come to an end?
Always the same thing, the scalability issue. So basically right now, Ethereum, where most of the action is actually happening, is becoming more and more a rich boy club. So basically,
it's becoming a
rich boy clubs.
Oh.
And basically, right now on Ethereum, it's 200 DY to do a transaction, which means for a simple transfer, several dozen cents. But as soon as you start to do more complex interaction, it will cost you $5 to $20 to $50 to do a transaction. And obviously, if you have $1 million, you don't really care, because the percentage of your transaction fee compared to your action is not that high. But when we try to build the future of finance and decentralized finance for everybody, with everybody at the same rule, and we just price out the smaller portfolios, well, I think it's not that interesting.
That YAM one.
Yeah.
And you think it will just keep going all week?
Yeah, it will keep going all week. And basically the make it or break it point will happen in a few hours. So basically YAM is supposed to be worth $1 per asset.
Right.
And right now it's worth $100 per asset. So
yeah. No, well, yeah, correct. 97. I mean, it's 102.
Yeah, something like that. And basically the way they prevent that is that the monetary supply is not fixed. So basically if, and I will simplify a lot the thing when I say that, but if one YAM is worth $100, you will end up with 100 YAM in order to incentivize you to keep the same amount of the total supply. So your ratio of the total supply as a whole never change because it go up and contract according to the price fluctuation, but everything is done to actually keep the peg to $1. And the previous example we had of asset trying to do that, it's actually not a new idea at all. But one of the popular ones we had in Ethereum was Aave. And what we learned is that it never worked. It never worked in the past and probably will not work this time. But in the short term, what we can be sure is there's going to be a lot of fluctuation, a lot of volatility. So if you are an experienced trader, well, have fun because volatility is where a trader make it or break it. But if you are not interested that much into day trading, maybe there's better thing to do on Ethereum right now.
Sure. But I mean, with YAM and so forth, I mean, how can they actually prove that any money that people put in there, how can they prove it's safe? I mean, given that this is crypto and hacks have happened.
No, it's extremely dangerous. And I want to make it completely clear. It's extremely dangerous. Usually most projects now, it's becoming more and more an industry standard. We do security audits and even several security and audits on the code base of the protocols we publish. And for example, if you go to aave.com/security, you will find the latest, the most recent audits of our protocol. But that's something that you can afford to do when you are a well-established project. But when you are a 12 hours old project, that's not always something that you can either afford and have the time to do, because a good audit takes weeks or months to do.
Mm-hmm. Out of interest, have you got any data about what people are going into YAM by any chance?
400 million at the latest count, apparently. And
no, but I mean, what people? I mean, this is insane. But like, what people? Is it like, I don't know? Is there any data on that at all?
Well, the good thing about decentralization is that for us, it's just a bunch of Ethereum address. So everything is decentralized. There's no KYC, and to me, it's not a bug. It's a feature of decentralization, and so we cannot know.
Right. Yeah. Crazy. That would have been just interesting had anyone been, I don't know, watching it.
I'm kind of hoping, Erica, that this kind of falls on its face, YAM, as we're doing the podcast. I think it would be amazing timing. Literally get into like the 11:15 moment and then YAM just comes cascading down with a smart contract exploit. Fingers crossed. That'll be free box office stuff.
Are you watching it live as we speak? Ryan?
I don't know about you, but like I'm in a few WhatsApp groups and people just keep talking about YAM. It's like, wow, really? Okay. It's,
you should be on WeChat then. It's even worse.
Oh, really? What's it saying?
So basically, YAM is what they call a fair distribution, because anybody can deposit and there's no pre-mine, there's no percentage of the supply to the funding team. So it's supposed to be fair, but the Asian market and especially the Chinese market that you can find on WeChat, they are super pissed because they launch in a time frame that was during the night time in China. So they basically discovered YAM like 4 hours or 6 hours after everyone, and 4 to 6 hours in this kind of market makes a huge difference.
Yeah.
So,
well, just since we've been speaking, it's gone up to $111 in those 2 minutes or so.
Yeah, it's well,
21,000 transactions.
Well, I mean, the great thing here is, Erica, there could be just a little backdoor, right? There could be one of the developers was already put out the guise of, don't put stuff into this, it's unaudited, we didn't have SSL secured, everyone's gone crazy, and they've got a little backdoor exploit, which they just drain everything and off they go.
Well, it would be the first time?
Not the first time. In the context of this one, and I can only talk for the land pool contract, I was not aware to find anything like that in the contract code because it's open source. So the code is actually auditable by anyone. And basically yesterday when I discovered that, I dived into the code, and also our core dev video did an awesome thread on Twitter to explain the potential issues or things are built within the YAM pool. And so far it seems, well, it's not very obvious that there's an issue, at least.
I mean, still, 400 million is an insignificant pocket change.
Yeah, that's a good start.
Yeah.
Yeah, we'll definitely, definitely go into that one, I think. Hopefully we don't just get bombarded with YAM questions because of the recent notoriety, but there we are.
Yeah.
Fun and games.
So they've even tweeted that they're serious about this being an experiment and the code being unaudited. Please exercise caution.
Yeah.
Yeah.
Yeah, but we are in a market where Wi-Fi, which was like the previous big hype in the ecosystem, they just said when they released like Andre Cronje, which is a very cautious guy, a very competent guy, when he released the Wi-Fi token, he said, this is completely valueless, and now we are at $6,000 per coin or something like that.
Yeah. But I mean, you had the useless Ethereum token in the ICO hype, right? Saying we are completely useless. People put money in. So yeah, just on CoinMarketCap, Europe 27%, Compound 51%. There's an Ample for 33%. There's a trend here.
Yeah. So basically, what happened right now is that in our case, and it's exactly the same for the other project, as we have a YAM pool. So basically, the way you get YAM is to actually deposit some kind of assets. You have 6 options of that inside the YAM protocol in order to generate some YAM. And land is one of them. And what we actually witnessed in the market yesterday is that a lot of people were buying land into the market in order to farm YAM. You
need a YAM ticker, Erica, just superimposed over to show the amount of money being locked in and the price of YAM.
I've got the Etherscan open. I just closed it. I've got the Etherscan open. So, yeah. But there's only been 200 transfers in the last minute.
Yeah, it's not going to slow down.
Oh, another 300. Sorry, 300.
Basically, in 4 to 5 hours.
Oh, wow. It's up to $130 now. Yeah.
Because I think most people want to get in before the first 3 days.
But I mean, do you think it will keep going up though?
I'm pretty sure the rebase will drop the price per asset, but that doesn't mean it will drop the global market cap. Like it's 2 very different things with this kind of assets. And basically in 5 hours and 7 minutes, we will get the first rebase. And so that's going to be quite active. To say the least, we're gonna witness a lot of action, a lot of people very happy and a lot of people very unhappy about it. Yeah.
Do you know how much of this was their own promotions, their own marketing, and how much was just sort of crypto Twitter?
He's a well-known actor. So basically, Dan Elitzer from IDO VC, which is a huge actor in crypto, and the other guys. So I think YAM worked it because the people that created it and talked about it were known and by very known actors of the ecosystem, and it just, oh, this big guy trusts this guy, so I will trust this guy because I trust this guy, and so on and so on. Sure. And it went super fast because like they knew people with a lot of available liquidity, so it's easier to kickstart something like that.
Yeah. Crazy.
For me, the real challenge is what will happen in 7 days.
Yeah. Well, that's it. As you say, with these rebasings, it was Ample, right? That went up to whatever it was, $4, and then now it's at 75 cents. And, yeah, once these rebases kick in, it's very hard to keep near to $1.
That's a very, very possible scenario that we will see a lot of fluctuation. So people will win from it, but a lot of people will lose from it. So I will try to express the message, if we talk about it, to be super, super cautious. And if you don't understand it, it's something complex. If you don't understand it, it's okay. It's completely fine to let that train go and leave the station without you.
Yeah.
Because you don't have to take every single opportunity.
Yeah. It'll be interesting to see which will be the one that starts up in the next couple of days, which tries to take some of that liquidity into the next money market to keep that train going again. So I'm sure there's a few people desperately coding right now to get theirs launched within a 4 or 5 day period.
Yeah, but I think like they had a bright idea that there's 2 waves of inflation on YAM. So basically there's the wave 1 that is happening right now. You deposit some land, some maker token, some comps or whatever they list, and you create some YAM. And basically the second wave that can happen and will happen in a few hours is that you take that YAM you created and you add some CRV, which is the token of bringing some liquidity into a curve, and you deposit that on Uniswap to provide some liquidity. And basically that will allow the asset to have a very deep liquidity pool. So it will be very easy to trade, to buy and sell, and will be less likely to be volatile, but still going to be with a lot of volatility. And I do believe they have been smart enough to be compliant with the CRV, the curve liquidity mining event that will start in the next few days. And basically, if they can ride their own wave, plus piggybacking the wave of curve, which is directly connected to Wi-Fi, which is directly connected to us, which is directly connected to Balancer, you end up with like yield farming on steroids, what we call internally the aquaponics.
So what was that you call that internally?
The aquaponics.
Okay.
What was it?
Aquaponics?
What is that?
I don't know. You don't know, maybe my English is bad on this. So basically aquaponics is a form of agriculture where you have fish that produce nutrients for plants that create nutrients for fish,
right,
and so on.
Okay.
Synergies, basically yield farming synergy between protocol.
Okay.
It's all gone food based.
I think one of the questions we're definitely going to get is, how do I effectively yield farm? What are the major, talk me through how I set up my various markets and ensure I can hit these 2000% APRs or what have you.
What is really interesting is that it's not that easy to yield farm. Actually, it's not just you go to a website and then you click on stake. That's the point. But when you harvested your YAM, how do you sell? Because it's not listed on any centralized exchange. So if you are not aware of the centralized exchange, what do you do? And even on Uniswap, it's not on the front end. So you have to find the contract address and import it into Uniswap, and very few people are able to do that. And with the very high gas price, you need some kind of heat and to be able to increase your gas price and replay your transaction with the same nonce. And all these kind of things might seem super easy to us because we are kind of Ethereum native, but for a lot of people, it's like crazy.
Mm-hmm.
I mean, I think this is one of the things we definitely want to go into is the actual number of users who are actually participating within these markets, because it's
let's start a poll. Let's start a poll. First question.
Sure.
Who has invested in yield farming? Ryan.
Well, how many actual users?
Who is an honest worker?
Yeah.
Doing honest work. A farmer doing honest work.
Who has participated in any yield farming? We can make it anonymous.
This could just be. This could turn into yield farming 101, Erica. Everyone here might just want to know how to do yield farming. Mark might have to do a demo.
Have you participated in crypto yield farming? Yes.
That's the good part.
What is it?
That's the good part about the synergy within DeFi, is that if you don't trust Jan, if you don't trust the new stuff that he just released because it's unaudited, basically what happened right now is that on Aave, we are a liquidity pool protocol, and basically on our money market, we list a few of the assets that are available to actually harvest Jan. And basically what happened is that all the liquidity of these assets have been dried out from our markets. And as the interest rate and what you earn as a depositor on Aave is simply an expression of the meeting of supply and demand, and right now the supply is super scarce and the demand is super high, you will get like double-digit APY directly on Aave. So if this is too complex or too risky for you, just deposit some asset into Aave and get a good chunk of the yield. It's like during the gold rush, sometimes you just have to sell the shovels and let the guys try to find the gold themselves.
Last question for you, because this is the Cryptocurry live chat. Unfortunately, you can't be with us in person because of lockdown, and hopefully you guys can be with us again soon in person, speaking at one of our Cryptocurry events. But Ryan always likes to know the answer to this question. What is your favorite type of curry?
Japanese curry, for sure.
Japanese curry. Good answer.
Yeah. Nihon curry.
We've had a lot of chicken tikka masalas. Thank you for having something a little...
Thank you so much again to Mark and Ryan for asking all the questions, and to everyone who joined. And see you again soon for the next Cryptocurry live chat.
Thank you very much. Thank you for your time.
Thank you guys. Have a good evening. Take care. Bye.